This conference will now be recorded.
And I request all of you to please mute your microphone. And if you want to speak anything, you can unmute and speak, okay? So keep your microphone muted unless you want to speak something. So it will improve the audio quality. Yeah, thank you very much. Yeah, now let's start with my introduction. So I'm the trainer. My name is Srinivas Kasreddy. And the training is core program name is CO in S4 HANA Integrated Training Program. Why I named this as this, I am going to explain. And before that, let me explain about my experience. So I have nearly 18 years of experience in SAP. So in fact, I started my career as an ABAP programmer. Later, I became a FICO consultant. And sometimes I worked as a full-fledged CO consultant. And during these 18 years, I worked in various domains like airlines, like manufacturing and banking, and processing, etc. So during the 18 years, I worked in various domains like airlines, manufacturing, banking, processing, etc. And this is about my experience. And now about the prerequisites for this course. Prerequisite for this course is knowledge in accounting. Okay, knowledge in cost accounting, better, let's be specific. At least you should have some basic knowledge, like how to do costing. And of course, practically, we are going to do that. If you have learned cost accounting in your BCom or MBA, whatever, in your graduation, it will be helpful for you. And you should have prior knowledge in FI. And not necessarily in S4 HANA, either ECC or S4 HANA, or, you can anyone. That means if you have knowledge in FI of ECC also, you can go for this course. Or if you have knowledge in FI in S4 HANA platform, then also you can take this course. That means a basic knowledge of FI is mandatory here, because we are not going to discuss how to make primary postings, how to like how to make postings in FI, how to display balances, etc. All these things, how to create a GL account. Those basic stuff is not going to be taught in this course. Okay, so you should have prior knowledge in FI, and knowledge in cost accounting is, if you have that, it will be helpful for you. Okay, and next is about the training methodology. As announced in the advertisement, that I don't use any PowerPoint presentations. And if any concept is involved, I'm going to use Microsoft Word like this to convey the idea. Okay, and you'll understand that how I'm going to convey the idea in this session. And why I name this as CO in S4 HANA Integrated Training Program. Yeah, most of us, as we discussed already, FI is a FI basic knowledge is required to take this course. That means it is implied that you have basic knowledge in FI, and we all learned FI. And when we are learning FI, we don't have any problem. When we start learning CO, so the problem starts. What's the reason? So when we start learning FI, we start with GL, then we'll go for AP, then AR, like that we master one by one. But when it comes to CO, the technique is not going to work. We start with the basic creating controlling area, then we go for cost center, we go for internal orders, and you can't go beyond that. So what is the reason? The reason is like this: CO is highly integrated with other modules. Like FI, SD, MM, PP, PS, etc. And CO components are highly integrated with each other. CO components are highly integrated with each other. First, let us take the first statement. CO is highly integrated with other modules. Okay, let me make it a little bit bigger. CO is highly integrated with other modules like FI, SD, MM. For example, let's take Coppa. Most of the data comes from SD module into Coppa. When you create sales order and do delivery and billing, that information is transferred to Coppa. So here in this course, we are going to configure SD module also. And we are going to create sales orders, we are going to do delivery, and we are going to do billing, and we are going to transfer that information to Coppa. And we'll check that information in Coppa, so whether it's been transferred properly or not. And most of the data, product costing data, comes from PP module. So here we are going to configure PP module. We are going to maintain necessary master data in PP, and we are going to generate production orders. We are going to do production order confirmation. We are going to do all month-end activities of production order. Then we can do actual costing process. If you want to see the output, all these other dependent modules are also should be configured. In this course, so we are also going to configure not just CO, we are going to configure SD, MM, PP to the extent we need. And we maintain the master data also. And we are going to do all month-end activities, and we are going to see the output. Okay. And CO components are highly integrated with each other. For example, let's take CO components like cost center accounting, like internal orders, like Coppa, etc. So you can do settlement of internal order to cost center. You can do settlement of internal order to Coppa. You can do settlement of, you don't call settlement, you do assessment of cost center to Coppa. And you do settlement of production order to Coppa. That means, so all these components are related with each other. So the relationships are very complex. You need to understand the relationships. So that makes a CO a different thing. That makes CO a difficult to understand thing. Okay, in this course is going to answer those problems. So that's why we name it as integrated, not just CO. All the related independent modules and components, everything is discussed in detail. So you'll have a hands-on on these things, and you are going to see the output. So if I say any actual costing process, we are going to see the output in actual costing process. If you want to do that, you have to configure PP module also. And of course, in the live project, we don't configure PP. PP consultant will take care of it, and PP user will take care of PP and user activities. But here, we are going to do those things as well. So in order to see the output in our CO related components. Okay. Yeah, and this is the reason I named it as integrated training program. And target audience. Target audience is target audience of this course is like if you are a FI consultant. If you are working as a FI consultant and FI consultants who want to upgrade to CO. Yeah, here is a question. What is the use of PS in CO? Where it is used? PS means project systems. Just like PP module, in project system also you can do some settlements to you can do product costing also. If project is there, just like projects also to be costed. For that information comes from PS module. PS stands for project systems. So costing for projects is done in CO itself. Okay. Yeah, here we are going to take examples, production orders. That means PPR module is going to be configured. Yeah, so PS is a separate module, in fact, project systems, but costing is done for CO itself. But here we are going to take example PP module, but almost 80% to 90% will be is same. With a little more effort, you can do costing in PS also. Yeah. Next, yeah, target audience, FI consultants who want to upgrade to CO. If you are already working as FI consultant, generally we call it as FI CO consultant, but to be specific, most of the time you'll be working in, yeah, of course, just like PS is also module, project systems is also a module. Okay, PP is also a module, SDMM, these are all modules. material, PP work center, just like in the same way, PS projects, work breakdown structures, those kind. Yeah, we are going to discuss that later. Don't worry about PS. We are going somewhere. Okay. Just replace PP with PS. What is the relationship with PP? So we are going to take all the throughout the course. We are going to take example from PP, but you can replace them with PS with little effort. Yeah, in PP we have work breakdown structures, networks, something like that. Just like cost centers. In CO we have cost centers, internal orders, etc. In PP we have production orders. Same way in project systems we have projects, work breakdown structures, networks, something like that. Yeah. Now target audience. If you are an FI consultant, if you want to upgrade yourself to CO, you can take this course. Or CO consultants. If you are a CO consultant, yeah, here are some questions. Question from Sriharsha. In S4 HANA, we have Abdoka as single source of. No, Sriharsha, let me come to those points again. Please concentrate on what I'm, yeah, you can put all these questions later, later part of this session, okay? Or else I'll give a time at the end of the session. If it is relevant in the score at the point I'm talking about, you can raise the question. Or at the end of the session, I can give you some time. You can rate the questions, okay? Then the discussion will be meaningful. Yeah, if you're a CO consultant in ECC platform, okay, you can take this course and you can upgrade yourselves to S4 HANA platform. You can also take this course. Or if you are a fresher, got trained in FICO, but not good at CO. That means you already got trained in FICO module, but the training you're satisfied with the training part in FI, but CO you're not so good at CO. So you can take this course. And generally, if you can take this course to become a full-fledged CO consultant, okay, and you can add nearly 5 years of you can claim 5 years of experience after this course. If you take this course and if you practice thoroughly, if you understand all the concepts thoroughly, you can claim 5 years of CO experience and you can add it to your resume. Okay, after this course. And yeah, this is about target audience. And as I told you, no PowerPoint presentation is used. I'm going to use Microsoft Word and I'm going to type in the concept or whatever. And my typewriting skills are moderate. And if you feel it is too slow, don't worry, you'll get used to it. Okay. And now, what is the difference between? Yeah, here we are discussing about why it is difficult to learn CO. To make you understand that, I'll insert one table here. On one side, I'll take FI. Why I'm taking this example? Because we all learned FI, but we never have a problem while learning in FI. While learning FI, the problem arises when we start learning CO. So you need to understand the difference. So this is one reason. These relationships, complex relationship between other modules and in between the components. And one more reason is like you know that FI is for financial accounting, CO is for cost accounting or management accounting. CO is for cost accounting or management accounting. Yeah, one more difference here. While posting in FI, most of the time we'll work with real figures. We post real figures most of the time with some exceptions like provisional entries, uh, like sometimes we make foreign currency valuations and we post them and we reverse them on the first day of next month, something like that. On month end, we generate accounting entries for foreign currency valuations, foreign currency balances, and we reverse them. That means it's not realized yet, but valuated loss or gain also recorded and they are reversed. Okay, there are some examples where some exceptions are there, but most of the time we'll work with real figures. For example, if your salary of 5,000, you make an entry for 5,000 rupees. You receive a cash of 10,000 rupees, you make an entry for it. But when it comes to CO, the difference is here. Most of the time, you work with plan prices, plan or standard. I'm using both. What is the difference? I'm going to explain. Standard prices are plan prices during the month, and actual prices are calculated at month end. The difference or variance. Variance is the difference between actual price and plan price or actual price and standard price. The variance is settled or posted, whatever you may call. Now, look at this set of these three statements. This is very important. If you understand these three statements, if you can apply these three statements in different places in CO, you can understand. You are there. Almost all the components. So these statements are applicable in CO. So I'll explain briefly now in this session at this moment. And in this session itself, I'm going to apply theoretically to these three statements to different components. So what is plan price, standard price? For example, if you take material, when you, yeah, excuse me. Let's take when goods are delivered to customer or when your goods are received from production. Let's take goods received from production. When finished goods are received from production and an accounting entry is made and your inventory is updated. So at that time, standard price is used. And actual price is calculated at month end, because based on all the expenses incurred in the cost centers, whatever, based on all the raw material consumptions, whatever, actual costing is done at month end. So why not actual price? Why is plan price and standard price during the month? The reason is actual prices can only be calculated at month end. Let's take cost center. So throughout the month, you will be posting cost center expenditure even at month end also. That means I cannot finalize cost center expenditure until the month end. So I cannot calculate actual prices until the month end. So for that reason, we use plan prices or standard prices. At month end, actual prices are calculated, and the difference is between standard price and actual, that is called variance. Variance is settled or post. Now we are going to apply these statements to various components. We are going to see that in this session theoretically. Okay. Yeah. What I mean to say here is you need to understand the business process first. It's not like cost center accounting. You should not be thinking like cost center accounting, internal order. I know cost center accounting, I know internal order. It's not the correct way of thinking. But in FI, you can say, okay, I know GL, I know accounts payable, I'm good at IAR, asset accounting. You can say that. But here it's not so. You should be thinking in terms of business process, like how much you know in product costing, how much you know in Coppa, how much you know in settle allocations, something like that. So this course is going to help you in that way. Okay, and your complete thought process will be different, and it's going to change after taking this course. And after taking this session also is going to be changed to some extent. Yeah, now what are the components that are going to be covered here? So we are talking about CO components, and they're related with each other. This is one more thing. They're not independent topics. Cost center is related with product costing. Internal order is related with cost center. So a cost center with Coppa, finally all the information is transferred to Coppa, something like that. And product costing and Coppa are also interrelated. I cannot say, some people approach me, I want to learn Coppa only. So it's not right approach. So even data from product costing is also transferred to Coppa. In that case, you need to learn product costing as well. So you need to learn as a whole. It's not as an independent topic or something like that. Okay, now what are the components that we are going to learn in this course? Let's start with cost centers, then internal orders, then product costing. Yeah, any messages here? Sometimes I miss these messages, okay? Don't worry, you can call me, or sorry, you can yeah, okay, speak in the microphone, okay? No problem. Yeah, product costing, COBA, profit center accounting, etc. So these are the major things. And out of these things, most of the around 3 to 4 months course, 90% of the topics are dedicated for COPA and product costing. And it is completely business process oriented. It's not like cost center, it's not like internal order, it's not like that. So it's like product costing is COPA will be the main focus. Okay. And okay, let me, yeah. So these are the major components we are going to cover. Now, in cost center accounting, what are the major things we are going to learn? Here, basically, allocations are important. And what is an allocation? So let me take an example. For example, I have a cost center called Cafeteria. A cost center called Cafeteria. And cafeteria
Yeah,
provide subsidies. Yeah, yes. Any
yeah.
questions?
In this course, it will not include the material ledger.
Yeah, yeah, yeah. Those are questions are going to be answered.
Yeah, okay.
Okay, this material ledger is part of product costing. That's why I haven't mentioned specifically here. Yeah, I'm going to explain that. Yeah, cafeteria is a cost center which provides subsidized food or free food to the employees, and it provides subsidized food to free food to employees of different other cost centers. So what we do at month end, whatever expenditure that happened in cafeteria, is going to be allocated to other cost centers. For example, here I have cost centers like, yeah, let's assume like we are a automobile manufacturing company. So we are body shop. We have cost centers like body shop, assembling, painting, etc. That means at month end, yeah, see, employees of all these three cost centers consume food of cafeteria. So these are production cost centers, and this is overhead cost center. So at month end, whatever expenditure that is incurred in cafeteria, it should be allocated to these three cost centers. For example, we have rent of cafeteria, okay, 72,000. Okay, let's say, okay, 27,000. And salary of cafeteria people, 18,000. And uh, purchasing food items, okay, 18,000. Total is 72,000. Now at month end, what we do, we allocate all these expenditure to these three cost centers, but on what basis? So allocation basis. What would be the right allocation basis here? For example, if more employees are working in body shop, they consume more food. So it is appropriate to allocate costs based on number of employees. If more employees in working in a cost center, they consume more food. So number of employees will be the allocation basis, right allocation basis here. So how many employees are working in body shop, how many assembling, how many in painting. So according to the ratio of employees, these costs are allocated. And allocation cost element. So I can allocate rent separately, salary separately, and purchasing cost separately. Or I can allocate these 72,000 combinedly to all these three cost centers. So there are different methods. One way, if I allocate these 72,000 combinedly, then we use something called a secondary cost element. Secondary cost element is here cafeteria charges. Now you can understand what is a secondary cost element. Primary cost, these rent, salary, purchase, these are primary cost elements. Primary cost elements means they have one-to-one relationship with the FIGL account. So they have their corresponding GL accounts. There is a rent cost element, there is rent GL account, salary cost element, salary GL account, something like that. So primary cost elements are used to transfer data from FI to CO, or they're nothing but transferring primary costs to CO. Whereas these 72,000 I'm calling combinedly as cafeteria charges. So which is a secondary cost element. And secondary cost elements do not have their corresponding GL account. So this is the total of these three cost elements. So now I can allocate costs under this secondary cost element, cafeteria charges. For example, here in this, yeah, this just like in FI, we have debits and credits in CO. Amount is deducted and added to the other cost center, deducted in one cost center and added to the other cost center. For example, here, what are the characteristics of SCE? What is SCE? Secondary cost elements you are talking about. Yeah, I just give one example of secondary cost element, cafeteria charges here. Yeah, that means it do not, first thing is it do not have their corresponding GL accounts. You can use them to summarize primary costs, and you can summarily allocate them under the secondary cost element, or in number of places throughout the course we are going to use them. Yeah, just like in FI we have GL accounts, in CO we have cost elements. So you can practically see the use of them instead of discussing them theoretically. Like different kinds of cost elements are there, like for allocation you use one cost element, like cost allocation. Same way for activity allocation we use secondary cost elements. Same way settlement also we use secondary cost elements, etc. Yeah, now cafeteria charges. And for example, minus 25,000 and 25,000 here. Delete negative symbol here. And cafeteria charges minus 20,000 and here 20,000. That means amounting is being deducted here in the sending cost center. This is sending cost center and added to the receiver cost centers. These are receivers. This is sender in the allocation. Always there will be partners. Partners can be either sender or receivers. There can be multiple senders and multiple receivers. Of course, one point of view sender, but there can be multiple receivers. Here there are 3 receivers are there in this case. Yeah, now 20,000 and cafeteria 20, 45 and 27, right? Yeah, here. Yeah, how it is calculated, system will calculate that based on number of employees. If 72,000, it will create a ratio of somewhere we maintain how many employees in each of the cost center. So based on that, yeah, we call this one number of employees as something called statistical key figure. Based on statistical key figure, the allocation is recorded. Okay, so in each cost center, each receiving cost center, how many employees are working? That will be the basis of allocation. So here, just like in FI, amount is deducted and added to the other cost center here. Debits and credits are there in CO2. Yeah, this is called, if you use this kind of assessment, that means if you use secondary cost element and you allocate summary of total expenditure instead of individual cost element, you call it as assessment. Okay, or if you do allocation of rent separately, salary separately, purchasing cost separately, then we call it as distribution or periodic reposting. Small difference is there between distribution and periodic reposting, but we have a dedicated topic for each kind of allocation in the course. So you'll understand what is assessment, what is distribution, what is periodic reposting, what is the difference between periodic reposting and distribution, etc. Now, so this is called, here we are allocating costs. So this is cost allocation. So what are the cost allocations we are going to cover here? Like assessment, distribution, periodic reposting. Okay, this is one word. Okay, I'll put Yeah. Next is, it may not be always possible to find a proper basis for allocation. For example,
Yeah,
I will take, yeah,
just a small clarification. So whether when we have the primary cost elements, these primary cost elements are should be equal to the secondary cost elements, right?
no,
Now you have given
here in this case, the total of these three primary cost is equal to the secondary cost, 72,000.
okay, I think so. In this case, that rent amount should be changed. You know, it's approximately
Yeah, total
63,000.
is it? Okay, 18. Yeah. Maybe this is 36,000. Okay. Yeah.
Yeah, and correct me if
Calculation
I'm
error.
wrong. Yeah, so
This
please correct me if I'm wrong. So there is
uh
a, yeah, sorry.
yeah, go ahead. Yeah.
Yeah, you just correct me if I'm wrong. So basically, there is a overhead cost center. The overhead cost center, against that overhead cost center, will have the postings again, like rent, salary, purchases. These amounts will be allocated to the production cost centers. No. These amounts will be allocated to the secondary cost element. So do we need to post manually that secondary cost element amount?
No. It will be recorded automatically. Secondary cost is it is derived.
Okay, secondary
You don't
cost element.
yeah, as a part of it is like this. Actually, what is the total? It is 72,000 here.
Okay.
What is posted is 72,000. It is 72,000, but allocation is minus 25 minus 20 equal to 72,000. The balance is 0. That means
Okay. So
when the allocation is
yeah.
recorded under cafeteria charges, you don't need to post them. When you do allocation, the allocation is recorded and primary postings are not recorded under cafeteria charges. Okay.
Okay. So secondary cost elements will be posted through the, I mean, allocated through the distribution channel. Okay, for sir. I got the point. So
Okay.
previously it was some confusion when we have something a rent to 27,000. No? So I did not understand the concept. Thank you, sir.
Yeah. Now it's clear, right? Okay. Now every time it may not be possible to allocate costs. You may not find a proper allocation basis. Then we use something called activity. Now let me copy this. Let me take an example like maintenance, plant maintenance. Now I'm going to take plant maintenance as the cost center. Plant maintenance takes care of different cost centers. It provides maintenance activities to the production cost centers. But I don't find a proper allocation of costs here, proper way to allocate costs. Then, yeah, let me take, for example, here in same cost elements. Instead of purchasing, I'll take consumables, something like that. It will be more appropriate. And same, yeah, 72,000 expenditure is there here. But I cannot allocate rent, salary, consumable to these three. So what I do, I use something called activity. Instead of costs, I create activity. To be specific, activity type. What is activity type? This is one important thing in product costing. You need to understand what is activity type. Of course, we are going to see it practically in the course. But here I'm just trying to give you a theoretical way. I'm explaining it in a theoretical way. Activity type is something like you may come across the words like man hours, man days, machine hours, etc. They are activity type. And the cost center expenditure is converted to activity type and activity is allocated. Okay, now let us take, let's do, here we cannot allocate costs. So I'm going to create an activity type like maintenance hour. Maintenance hour is the activity type. So what happens here? How maintenance hours are generated, how it is calculated, something like that. So what is the total expenditure? Okay, let's not, okay, let me delete all this stuff. Yeah, total expenditure is 72,000. and total. Yeah, this is, let's assume this as plan expenditure. Yeah, now I'm trying to look at these set of these three statements. Yeah, here I'm going to apply these statements here for activity allocation. Plan prices are standard price during the month. Yeah, here standard prices are used for materials. For activities, we use plan price. Plan price during the month, actual price at month end, and variance is settled after calculating actual price. Now, yeah, here what is the activity type? I'm going to use maintenance hour, and this is plan expenditure is 72,000, and I also do something called plan activity quantity. Plan activity quantity is, for example, for easy calculation sake, I'll take 720 maintenance hour. So this is plan expenditure. That means we enter this information in cost center planning. And plan activity quantity, we enter these figures in activity planning. That means here it takes 72,000 rupees to produce 720 maintenance hours. That means now you can use the formula activity type price. Activity or activity type, both are going to be same. Okay, don't get confused. If I say activity, it is going to be same. Activity price is equal to cost center expenditure divided by activity quantity produced. Produced in what time? This is cost center expenditure of the month. And this is activity quantity produced in month. In month or in period, whatever you may call. Now let's apply this. Let's copy this. Yeah, let's put plan activity, plan here. Let me add plan here. Plan activity price is equal to plan cost center expenditure divided by plan activity quantity, and actual activity price is equal to actual cost center expenditure divided by actual quantity. Yeah. Okay, to make it simple, I'll put it like this. Cost center expenditure divided by activity quantity. Cost center expenditure of the month divided by activity quantity of the month, you will get activity price. If it is plan price, plan cost center expenditure, plan activity quantity. If it is actual price, actual cost center expenditure and actual activity. This is the formula. That means how this formula is derived. That means in plan, this cost center can produce around 720 maintenance hours, and it needs 72,000 for that. So if I apply this formula, so what is the expenditure? Plan activity price is equal to 72,000 divided by 720. That means 100 rupees is the cost of each maintenance hour. Now allocation is done. Activity is allocated. We also call activity allocation or sometimes quantity allocation. Both are same. Now cost center splitting is different. Activity or quantity or activity quantity allocation. sometimes referred to as like that. Yeah, I'll come to your point, Kalyan. What is cost center splitting? Yeah, here now, so cost center can produce 720 maintenance hours in a month, and it can. And now let's come to the allocation part, actual allocation part. Let's delete this cafeteria. For example, here it is allocated like this. Everything is recorded in the sender as well as receiver. Yeah, here secondary cost element that is going to be used is maintenance, plant maintenance charges or maintenance charges. So always activity is allocated under secondary cost element. So here secondary cost element maintenance charges is used. So yeah, it is like this, maintenance charges. Okay, let me create 3. And it is, or you can call it in terms of quantity also. Yeah, now for example here in body shop, so activity quantity. Activity quantity is allocated is, for example, 200 maintenance hour. And what is the plant price of each maintenance hour? 100 rupees. And it is also converted to price. That means it is recorded under maintenance charges. Maintenance charges is 200 into 100, 20,000 rupees. Yes. Now here also 200, okay, 20,000. 200, okay, plus here let's assume 300. Here it will be 30,000. This is rupees. So here quantity is allocated and quantity is validated with plan price here, and it is also cost is also calculated. That means 200 maintenance hours is equal to 20,000 rupees. Here also it is recorded in both ways. Okay, let's take like this. First one minus 200 maintenance hours and minus 20,000 rupees. Second one minus 200 minus 2,000. Third one minus 300 and minus 30,000 rupees. That means quantity is recorded and also cost is also recorded like this under secondary cost element maintenance charges. Now if you look at here, yeah, here initially when this is during the month when activity is allocated, it is validated with plan price here. 100 rupees is plan price. So 200 is actual quantity into plan price. Now at month and actual price are finalized, actual expenditure is finalized. For example, actual expenditure. I'm trying, okay, let's not get into details. Okay, just let's assume 81,000 is the actual expenditure. Same activity type is used and actual activity quantity. Actual activity quantity is how much? 200 plus 200 plus 300. Plan is 720, but in actual it could produce only 700 maintenance hours in this month. Okay, this is per month. We are talking about. This is very important. In what time? All these are done on periodic basis. Okay, in actual, it could produce only 700 maintenance hours. Now, how actual activity price is calculated? 81,000 divided by 700. If you use the calculator, now 81,000 divided by 700, 115 point something. Okay, let's make it round figure, 115. What is the variance? Activity price variance is 15 rupees. How 15 rupees? Plant price is 100 and actual price is 115. Difference is 15 rupees. Now it should reflect here. So there happens something called revaluation. During revaluation, what happens? Only the cost is difference is allocated. What is the difference here? 200 into 15 rupees is the variance. 200 into 15, 3,000 rupees. And here also 3,000 rupees. And here 300 into 15, 4,500. And all these things are also recorded here. So initial allocation is 40, only 70,000 is allocated, but 81,000 is, even the 11,000 also should be allocated. Okay, so here revaluation, so minus 3,000. Minus 3,000 and minus 4,500. Okay, now your activity is reflecting your activity allocation is reflecting actual price. 23,000 is, it is actual price. So now you understand how this statement is applicable. So at the time of actual price calculated, variance is settled to the receivers again. This is at the time of something called revaluation. This is nothing but variance settlement. Yeah, so this process is applicable in number of places, even Coppa. If you understand this process, so you can master CO. Okay, in SD, I mean, like when you do sales order also, when you do billing for sales order, it is transferred to Coppa. At that time, standard prices are used to COGS, to validate COGS. After actual costing, again the difference is transferred to Coppa. The same thing. Okay, this is a cycle every month. So why not actual price? You know that actual price can only be calculated at month end. So it is a cycle every month. So during the month, we use plan prices or standard prices, and actual prices are calculated, and at month end, variance is calculated and it is settled, or whatever you may call, posted, whatever you may call. Okay, so this is called activity allocation. Yeah.
So these variances to be settled to the cost center or any other thing will be settled. The variance difference amount, no, it will be settled to the some other cost center or internal order something.
No, yeah, I'll come to it. Here sender is, yeah, now I'll come to that point. Yeah, now Yeah, activity or quantity allocation. So what is the allocation basis? So there are different kinds of allocation, activity allocation here. Yeah, we have a dedicated topic for it. We call it as activity allocation. So in the course, we are going to discuss there are two kinds of activity allocation, direct activity allocation and indirect activity allocation. Both are going to be covered. Now, let's take here example. In this example, sender is overhead cost center, receiver is production cost center. In case of production process, yeah, here this is overhead allocation. So this is let's call it as overhead quantity allocation. Yeah, now here sender and receiver. Overhead sender is overhead cost center and receiver is production cost center. In the example we have taken just now. And now in the product costing, sender will be production cost center and receiver will be production order. That means you will allocate activity from production cost center to production order. In the general, that is called direct activity allocation. This is recorded during something called production order confirmation. At that time, activity quantity is also recorded, which is allocated from production cost center to production order. And same way, we do revaluation also at production order level. So initially, when activity is allocated, it is valuated with plan price. The same thing applies here. The same set of three statements here. It is applicable in the when we allocate activity from production cost center to production orders also. But it's a big topic actually. We have as I told you, almost 80 to 90% of topics are Coppa and product costing. Almost maybe product costing is in 3 months, 1 to 40 days, 30 to 40 days product costing, 30 to 40 days Coppa. Okay. So during product costing, you'll understand this process. And there is something called actual costing, which takes only 10 days for that actual costing topic. Yeah. See, people are raising questions actually, and all these questions, material ledger covered or not, actual costing covered or not. This session is going to answer those questions, okay? And if not, if any of your questions not answered, you can raise that point at the end of the session. I'll give you time to answer to questions, okay? And now, so indirect and direct activity allocation is going to be covered in this course. We have dedicated topics for them. In product cost, in cost center accounting, we have this direct and indirect. In the product costing also, we are going to cover this direct. We are not going to cover like that, but it happens automatically. But here, you will come to know the concept of activity allocation practically in this topic. And you are going to apply that in product costing as well. That's why I told you activity cost allocation is important from product costing point of view. And I told you in the beginning, they are related. So how cost center and product costing is related with each other. This is how they are related. Activity is allocated from cost center to production order. That's the relationship. Okay. Next, yeah, people are asking whether this course covered, this topic covered, or that topic covered. This session is, I'm going to answer all those things in this session. Okay. If not, at the end of the topic, you can raise those questions. Okay. Internal orders. So we are going to cover real and statistical internal orders. And we are going to cover internal order to cost center settlement. And we are going to cover internal order to Coppa settlement. Again, see, internal order to Coppa relationship, internal order to cost center. So these are the things that are going to be covered. And now it comes to product costing. So there are different things in product costing, different components or sub-components, whatever you may call. For example, we have product cost planning. We have actual costing. Actual costing, material ledger, or we'll consider them as separate topics because they work together. Because if you want to use actual costing, material ledger must be configured. And most of the topics are, these settings are configured combinedly. They're in the menu path also, they are together. That's why we treated them as one topic, actual costing, material ledger. And also we have something called cost object controlling. Okay, next, yeah, now what is product cost planning? So product cost planning is used to, yeah, why I'm giving all this information, at least you should know what is there in CO and you'll understand how to learn CO. You should know first how to learn CO. And if you adopt the same approach when you, whatever the approach you apply for FI is not going to work here. You should know what is there in CO, how to master it, and what kind of methodology to apply while learning. So then it will be helpful for you. And also if you are working as a FI consultant also, and if you know what is what in CO, it will be helpful for you. Okay, next, product cost planning. Here we create cost estimates, planned cost estimates. Based on planned cost estimate based on planned quantities. Planned quantities of what? For example, to manufacture a particular, let's take a simple example like a bicycle. To manufacture one cycle, how much raw components are required? You need 2 tires, 1 handlebar, 1 frame, 1 seat, something like that. But in practice, it may be less or more. For example, sometimes some component gets scrapped. Okay, so in that case, it may consume more or less. For example, if it is a steel, how much steel is required? For let's say 5 kgs. It may not use exact 5 kgs, may use 5.5 kgs or less than that, something like that. But you should have, production people have some planned figure in mind. That is planned quantity. So how much raw material is required and how much activity is required. Now I explained what is already explained about something called activity. Activity, main hours, maintenance hours, man hours. Let's take the same example, cycle. You have all the components. Someone need to assemble those components to convert into a cycle. So let's say 2 man hours is required to convert the components into a complete bicycle. Then that is called planned activity quantities 2 man hours. So you need to know that, and if you know the quantity and if you know the price, you can calculate the product cost planning. You can do costing. You can create a cost estimate. Okay, how these quantities are, so 2 types these quantities are determined. One is with quantity structure, planned cost estimate with quantity structure. And without quantity structure. What is this quantity structure? So this is PP related term. Quantity structure is commonly, BOM and routing are commonly called quantity structure. What is BOM? BOM stands for bill of material, and routing stands for BOM stands for bill of material. It is planned quantity of components that is required to manufacture 1 unit of a finished product. So to produce 1 cycle, you need 1 handle, 1 bar that is maintained in the BOM. Planned quantities. In actual, it may consume more or less. That's a different issue. Same way, routing. Routing is planned activities required to produce 1 unit of a product. Here in this case cycle, I told you, you need 2 man hours to produce 1 cycle. So that is the routing quantity. In the routing, we specified, BOM means plan routing plan activity, plan components or raw material, whatever you may call, plan raw material quantity. Routing means plan activity quantity. So in PP, they maintain this. This is the PP master data, BOM and routing. PP means production planning module. So production people will have some planned quantities in their mind. So based on that, they'll maintain this. So if you know the activity quantity into activity price, you'll get the activity cost. Same way, raw material quantity into raw material price. There may be multiple raw materials, there may be multiple activities also. Whatever it is, raw material 1 quantity into its price, raw material 2 quantity into its price. You'll get all the raw material cost, all the activity cost, and the total will be the cost estimate, planned cost estimate. So we are going to cover both. With quantity structure means if you have BOM and routing, you can create a cost estimate. It is called automatic cost estimate. That means quantities are taken from BOM and routing, and cost estimates are created. And without quantity structure means we create something called unit cost estimate. So in the unit cost estimate, we enter the items and their quantities manually. That's the difference. Automatic cost estimate means it is taken from BOM and routing. If BOM and routing not available, you create unit cost estimate. Simple. So here, when you release planned cost estimate, they will become standard cost estimate. Release means they will be updated in the material master. So this is one function of product cost planning. In the product cost planning, based on planned quantities, we create cost estimates and we release them. When we release them, they will become they will be updated in the material master as standard prices. So one of the function of product cost planning is to create standard cost estimates and be updated in the material. Okay. Now, yeah, this is planned cost, product cost planning. Same way, actual costing. Now let me copy the same thing. In place of plan, I'll put actual. Actual cost estimates. These two are words are contradicting. Actual means actual. Estimate means it is some kind of plan, but generally, no point of time we can really calculate actual cost. It is real to actual because so every month, so something to we calculate it on periodic basis. So it may be real near to the actual cost. That's why it may be called actual. In SAP terminology also, they use this word actual cost estimates based on actual quantities. Here, where do planned quantities comes from? Maybe from BOM and routing, if quantity structure is there. Otherwise, you enter it manually here. But actual quantities are recorded in or during something called production order confirmation. So this is a PP activity. In the PP module, they do something called production order confirmation. During production order confirmation, raw material consumptions are recorded, activity consumptions are recorded. If any goods received from production is also there, that is also recorded. Okay, so based on actual quantities and actual prices of that particular time, so actual cost estimates are created. That is actual costing. We have a dedicated topic for 10 days actually, just for actual costing. We are going to dedicate 10 days for actual costing. Is one of the major thing. And material ledger. So material ledger is used to work in coordination with actual costing and also in coordination with the MM. Okay, and main function of material ledger is in different ways. One is if you want to use actual costing, material ledger must be configured because all the material movements are recorded in material ledger. All material movements, inward, outward, etc., from at plant level. Because if you learn FICO from me, we discussed that material valuation is done at plant level, and also product costing is done at plant level. So all these material ledger record, all the records, material movements are also recorded at plant level for each material, either inward or outward. All of them are recorded, and any price differences are there. Like if invoice price difference or any production variance are there, they are also recorded in material ledger. And based and based on that, so actual costing is going to happen. That's why actual costing and material ledger work together. We have a costing run for actual costing, CKMLCP. But all of them, before that, you can see all the goods movements, consumptions, whatever in material ledger. When you do actual costing, if any settlements or anything happen, they are going to reflect in material ledger as well. Okay, and it can also be used. Material ledger is one more application of material ledger is with multiple parallel violation or multiple violations. You might have heard the words like Yeah, Satish, any questions? Yeah, all of you, can you hear me?
Yes, Mr. Sunil.
Yeah.
Yes, Mr.
Satish, do you
Sunil.
have any question? You said hi in the
Yes, yes,
chat.
yes.
No, parallel valuation and split valuation are different. I'm going to explain that. Yeah, if I'm talking about parallel valuation, so what is it? So parallel valuation, for example, if you have come across the terms like, okay, let me merge them. So if you have come across words like legal valuation, group valuation, same way profit center valuation. So maximum of 3 valuations are possible. Legal valuation is default one. If you are not using multiple valuation means you are using only this valuation. This is used for legal reporting purpose. Default. And these two are optional and not mandate. This is default and mandate. Default means it is there already. You don't need to activate it. Generally, we use legal valuation. Additionally, you can have 2 more valuation, group and profit center valuation. And if you're talking about split valuation means this is also called parallel valuation. I'm talking about parallel valuation. Split valuation is different. For example, in a same plant, you are procuring 2 kinds of raw material. Same raw material, but 2 qualities, for example. So you have to show the stock separately. But same inventory, only one inventory account is there. What you do, you use split valuation. So first quality, you as one sub evaluate separately. Second quantity valuation. So actually we have something called valuation type. When you maintain master data, you also have field valuation type. So that is split valuation. Okay, parallel valuation is, so you use legal, group, profit center, something like this. And these are done separately. For example, I do product costing separately for legal valuation. I do product costing separately for legal valuation, group valuation, separately for profit center valuation. And my material stock also displayed separately for legal valuation, group valuation, and so there are different views. Legal is also called views. Valuation or view, group view, legal view, something like that. Legal valuation means something like when you do product costing, all the components are treated like procured from, even though they are procured from different other company codes, they are treated each company code is treated as independent entities. In case of group, if you have multiple company codes, all the company codes are treated as one unit. And if any products, any component is procured from other company code, it is treated as a transfer instead of purchase. External purchases are treated as purchases, but transfer from other company code, purchase from other company code is treated as transfer. So the price will be different when you procure it from other company code from group point of view. So naturally, so your group valuation will be different. The same stock can be viewed from different point of views, legal point of view, group point of view, profit center point of view, something like that. Okay. Yeah. Now, yeah, if you want to use material ledger, or if you want to use parallel valuations, material ledger is mandatory. Or if you want to use actual costing, material ledger is mandatory. So we are going to discuss both actual costing as well as material ledger. And one more thing is we are going to use S4 HANA platform completely. Okay, this is also one important thing because version is S4 HANA 1909. The reason is it is material ledger is mandatory in S4 HANA. In ECC it is optional, but in this session I'm going to explain the difference between S4 HANA and ECC as far as CO is concerned. Okay. Yeah, so because of this thing, that material ledger is mandatory, so I had to redesign the whole course. Earlier I used to teach the same course in ECC platform. Now I'm teaching the same course in S4 HANA platform. So I have to redesign the whole course because of this. Now earlier I used to teach actual costing and material ledger together in ECC. Now I have separated material ledger. I included with MM. And I separated actual costing as a separate topic. So anyway, we're going to see that in the course. Next is cost object controlling. So in the cost object controlling, again, we have 3 subcomponents. Yeah, as I told you, I'm not going to use any PowerPoint presentations. This is how I convey any concept or any information is there. I'm going to convey like this. Okay, cost object controlling. Again, there are 3 components here, like product costing by order and broadcasting by okay, let me take it to a new page so that yeah, broadcasting by order, broadcasting by period, and broadcasting by sales order. So this is broadcasting by order. Is here order means it is manufacturing order. So manufacturing order can be either production order or process order. Okay, so here production order will be the controlling object or cost object. Let's be specific, it is cost object. That means all the costs are recorded under production order, and we do production order settlement to Coppa as well as FI, and we can analyze the variances at production order level. This is also called lot based costing. That means we create a production order for 50 items, and what would be the cost of those 50 items? So what would be the variance on those 50 items? So that's why it's called lot based costing. Okay, and this is make to stock scenario. And broadcasting by period. So if you manufacture goods in a very relatively simple manner, like you don't create production orders or anything like that, but you just manufacture goods. Okay, and this is repetitive manufacturing, REM. You manufacture goods in a relative simple manner. Each lot is not so important. Here you monitor the production process based on lots or production orders, whatever you may call. But here it's not so. So on monthly basis, what would be the average cost? Something like that. You'll calculate that. This is called REM. And this is here. Okay, here we call it as yeah, here production. Yeah, yes, I am giving the example for a make to order, make to stock, etc. Yeah, here we call it as product cost collector. PCC. PCC will be the cost object. And broadcasting by sales order. This is make to order. Not just all make to order complex. Complex make to order. So make to order means you manufacture goods based on customers' orders. That is make to order. But if all orders are same, make to order mass production. Make to order, complex make to order means you just manufacture based on customers' specifications. Customer will give you specification. For example, if you are a PC manufacturer, he'll give specifications like how much storage he wants, how much RAM he wants, how much display, what kind of display he wants, etc. Based on that, he will assemble the PC and he will supply. So you have to do costing separately for each item. Okay, so here sales order item. Sales order item will be the controlling object. Okay, so here we are going to cover these two scenarios, and in all this we are going to cover things like, as we discussed, most of the data comes from PP module. So we are going to cover all the PP related things, PP things like BOM routing we are going to create, and we are going to cover production order confirmation. Okay, create production orders. Production order confirmation and month-end activities like overhead calculation. These are month-end activities of production orders. Overhead calculation and revaluation. If activity is allocated to production order, at month end, after calculating the actual price of activity, it should be reevaluated. So it is also part of production order month end closing. Coppa revaluation, okay, and work in process calculation, and variance calculation. And finally, settlement of production order. So all these are part of PP module, but to see the output in Coppa and product costing, we are going to configure these things. We are going to do these activities as well. Okay. So after doing production order settlement and everything, then we do actual costing process. So as we discussed already, yeah, here actual quantities are recorded during confirmation quantities, and this, when you do production order confirmation as for production order settlement, so the variance is also transferred to actual costing. So while doing actual costing, the production order variance is also taken into account. So these are related with each other: actual costing, material ledger, etc. Revaluation and variance. I'm using a general term. Variance is something like this is, if I'm talking about revaluation, here I'm talking about activity price revaluation. Okay, this one I explained already. Here, this I'm talking about this cycle. So during when activity is allocated from production cost center to production order, it use plan prices. At month end, after actual activity prices are calculated, the variance is settled here. Okay, that is called revaluation here. Here I am talking about, this is called production variance. This is complete cost difference at production order level. This is settled to material ledger. Okay, and this is useful in calculating actual price, because if 10 production orders are there, so based on cost of all 10 production orders, the actual price is calculated. Yeah, here variance. Now you can apply this also here. Variance, for example, yeah, if you want to apply this here, let's take if you want to apply these three statements in here. For example, during the month, if delivery happens, delivery to customer. So for example, if it is 50 items into standard price. Standard price 300 rupees, for example. So accounting entry will be debit to FG inventory 15,000 rupees, right? And credit to COGS account 15,000. Now it is using standard price. At the time of delivery, it is also transferred to Coppa. So how it is transferred to Coppa? You need to understand the Coppa data structure. I'm talking about costing based Coppa here. For example, you have sales order, you have customer, what is STKKR? Yeah, Kalyan, I don't understand your question. Stock. Okay, you're talking of debit to credit to stock. Okay. Okay, sorry, here it's mistake. Yeah, if it is outward movement, right? Yes. Yeah, you're right.
Cox debit and
Yeah, you're right. Yes. Credit to, because this is outgoing, your inventory will reduce. So it is credit to inventory. Yes. Customer, product, these are called characteristics, and we have quantity, we have revenue, we have discount, we have COGS. Something like this, COG or COGS. So when sales order is at the time of billing, this information is transferred to costing based Coppa. Yeah, if you have some basic knowledge in Coppa, you can understand this. Yeah, it's implied that you have some knowledge in basic knowledge in CFI. Of course, you may be having some knowledge in CO. That's why I'm trying to explain this. Costing based Coppa. Sales order number 567. Customer 1. Product A. Quantity 50 items. And revenue 50 into, okay, this is standard price. And at the time of billing, okay, I'll add billing also here. So billing is sales price. Sales price is, for example, 500.
Hello. Hello.
Yeah, I can't hear him too. I'm down here. Hi, Srini, can you hear us?
I think he's facing some technical issues, maybe some network issue or something.
Hello, can you hear me now?
Yes, yes, we can hear you.
Yeah. Something wrong with the internet.
Yes,
Okay.
yes, Nambai.
Yeah. Good. 15,000 is COG.
Hello?
Okay. Yeah. Now, yeah. Any question?
No. Previously it was disconnected, your voice. So
Hello. Yeah.
yeah,
Okay.
yeah, yeah.
Yeah. Any question? Yeah. I was away for a few seconds. Okay. No problem. Now, see, this is COGS posting. It is validated with standard price. That means whatever you posted to COGS or inventory, it is not reflecting the actual price. So what happens during actual costing process? For example, if your actual price is at month end, whatever is calculated is 330 rupees. So what is the variance? So variance is the difference between actual price and standard price. 30 rupees is the variance. So now during actual costing process, optionally you have something called revaluation of consumption. This happens during the actual costing process automatically. Revaluation of consumption is, yeah, accounting entries done like this. It depends on either debit or credit variance. I mean positive or negative variance. So what is the quantity? 50 items. 50 into 30, 1500. So 1500, and to COGS also 1500. Okay. This is revaluation of consumption. That means now your COGS posting is reflecting 15,000 plus 1500, 16,500. Whatever is posted to inventory also 16,500 now. But here now this statement is applicable, you know, now how it is applicable to even to sales orders also. Here standard price is used during the month and actual price is calculated, and it is variance settled. I told variance settled, but it is revaluation of consumption. It's nothing but price variance is posted to COGS and inventory. Now in Coppa also it should reflect. Now what happens here? I'll copy this one. It is also reflected in Coppa. So one more record is created here. The record is like, okay, same set of characteristics. Yeah, here the COGS difference, what is 1500, is created as a separate line. So add more time Coppa periodic valuation. This is the month-end activity in costing-based Coppa. If you perform this Coppa periodic valuation, the COGS is reevaluated. Now, for same sales order, same product, same set of characteristics, your COGS is 16,500 price. So in Coppa also, this statement is applied. So this is what you have to learn while learning CO. Yeah, now let's add to this. So here we have routing all these multi-level means if multi-level production is there, level costing. Multi-level production means if you know SFGs.
Hello?
So generally, raw materials are there,
So your voice is breaking, sir.
there, and FGs.
Hello?
Hello, Mr. Srinivas. Your voice is breaking. Actually, we are unable to hear your voice.
I think he disconnected maybe.
Yeah, no need. Yeah, something wrong from my internet actually. Sometimes the internet is getting off. Okay, I complained them. No, it will be rectified. No problem. Okay, no. So raw material SFG and FG. So if raw materials are converted to FG, so it is single level. Or if it is raw material converted to SFG, it is single level. But first raw materials are converted to SFGs and SFGs are converted to FGs. So that is multi-level production. So first, if it is multi-level production, multi-level costing is to be done. First, raw material costed, then SFGs are costed, then FG is costed. Just imagine like this. If you have a car has various sub-assemblies like engine, and engine has sub-assemblies like motor, something like that. So if you want to do costing, first raw material costed, then engine components are costed, then engine is costed, and finally car is costed. Okay, so that is multi-level costing. So we are going to cover those scenario here. We are multi-level and multiple plants, also going to multi-plants. So what if one of the product is manufactured in a different plant? So multi-plant scenario is going to be covered. Okay, like this. And yeah, here also, yeah, work in process means, so at month end, if this is called unfinished goods. Unfinished means they are still under processing. If raw material is issued, but it is not converted to finished product yet, that means they are still under processing. So goods not received, goods receipt not posted, but raw material consumption recorded. Or goods receipt is not in proportionate with raw material consumption. So in that case, there is something material is still under processing. So at month end, you have to make a estimate of that, and you have to make a posting for it in FI, which is called work in process or unfinished products, something like that. Okay, and variance is production order variance we are talking about. And variance is a very complex topic. Like it's not just a variance is the difference between standard price and the actual price. Not as simple as that. So three kinds of variances are there, like production variance, plan variance, and total variance, something like that. We are going to discuss all of them. And next is Coppa. So in Coppa, we are going to cover two kinds of Coppa: account based and costing based. Both are going to be covered. And we are going to cover Coppa reports, Coppa planning, and various various topics in Coppa, like top-down distribution, characteristic derivation, etc. And Coppa valuation is also going to be covered. Okay, and we are going to cover both account-based and costing-based. But in EC scenario, we used to give more about costing-based. Now it is recommended to use account-based Coppa in S4 HANA. So that's the reason. So account-based Coppa also we are going to discuss in detail here. And costing-based Coppa, as it is, whatever is there in ECC, the same thing we are going to discuss here. And there are many differences. Account-based Coppa has been improved a lot in S4 HANA. That's the reason it's recommended to use account-based Coppa in S4 HANA. And we are going to see things like configure, SD to Coppa mapping, FI to Coppa, and we are going to cover production order settlement to Coppa. Okay, and these are the things we are going to cover. As I told you, almost 80 to 90% of time is meant for Coppa and product costing. And next, profit center accounting. So yeah, we are going to configure profit center accounting. We are going to make settings like how profit center is derived, etc. And profit center reports are also going to be generated. Okay, and this is what is going to be covered. And as I told you, most of the so complete training will be in S4 HANA platform, end-to-end training, and we are going to have a dedicated server. Dedicated means derivation function. Yeah, okay, I'm going to explain. Dedicated means for me and my students, because in a shared server, if you subscribe a server from a public domain, so you're going to get a lot of problems all the time. You're going to get errors, and you are going to, the server may get crashed often, and you are going to get into problems. Now you can't even finish your training. So we are using a server which is stable for quite around 1 year or so. So no crashes and no errors. Yeah. So there was some like derivation function. You're talking about characteristic derivation probably. Yeah. So characteristic derivation means these are called characteristics. Somewhere I was showing. Yeah. In Coppa, we have something called characteristics, like sales order, customer, product. Characteristic is the level at which you analyze the data. For example, I may want to see customer-wise revenue or product-wise revenue. So customer is one characteristic, product is one characteristic. Derivation means how these characteristic values are derived. For example, I use a characteristic like strategic business unit. So I assign certain product to one strategic business unit and other product to a different strategic business unit. So depending on the product, strategic business unit is also derived. Strategic business is also one of the characteristics. So you can create your own characteristics. Sales order, customer, product, these are coming from sales order. But you can create your own characteristics in Coppa itself, and you can analyze the data according to them. For example, strategic business unit. You can create it and you can assign products to certain strategic business unit, and SBU is going to be derived automatically. For that, you have to make some settings. Yeah, dedicated server database is safe. Yes, we've been using for last 1.5 year, so data is safe. Unless until if we want to move to a new version, we may format it and we may move for new version. But generally, there won't be any crash. Yeah, and yeah, I wanted to. It's almost 2 hours now. Okay, I'll quickly give what is new in S4 HANA also, as far as CO is concerned, before concluding the session. Okay, and one side I will take ECC, and other side I'll take S4 HANA. And I'll add one more column here. So for example, we have, okay, cost elements and GL. So master data is separate here. This is one of the major change in ECC and S4 HANA. Master. In S4 HANA, CO master data, CO cost elements and GL master unified. Why it is unified? What is the advantage of unification? This is one important point to understand. The reason is you have Agdoka table. Okay, so CO line items. Let me put it like this. CO line items are stored in COEP table. In S4 HANA, they are stored in Agdoka table. And when it comes to FI line items, they are stored in tables like BSEG, FLEGX, etc., something like that. When it comes to S4 HANA, it is Agdoka table. That means FI line items and CO line items both are stored in the same table, that is Agdoka. It is not just the same table, same line items, common line items are there. For example, if you are making a primary posting in FI and it creates a line item in Agdoka table, and that line item is for both FI as well as CO. So there is a common line item here. How common line item is possible? FI uses GL accounts, CO uses cost elements. So for that reason, even the master data of cost element has also been unified. So you can see a common line item for FI and CO in Agdoka table. So this changes a lot. Now the advantage is FI CO, there is no reconciliation issues between FI and CO. In previous versions in ECC, there used to be something called real-time integration, something like that. You need to make some settings. So when you do cross-company code allocations, accounting entries are generated automatically based on that setting. And even before that, before ECC, in R/3 something, in the previous versions before ECC, we used to perform some month-end activities so that FI reconciliation and FI and CO is reconciled. Accounting entries are generated and FI and CO reconciliation happens. But in S4 HANA, you don't need to make any settings. Reconciliation happens automatically between FI and CO because they have common line items. So this is one major change. Okay, and things like business partners, vendors, customers. So they introduce, you might be knowing this. This is a general setting, not specific to CO. There is something called business partners introduced in S4 HANA. And we have, okay, when it comes to tables, many tables like material ledger data is stored in Agdoka. I can add it here. Okay, it is stored in table MLEP or something like that. Here it is stored in Agdoka. Okay, I can merge this so that okay, I don't need to mention every time. And account-based Coppa. Account-based Coppa is data is stored in COEP. That means it is nothing but CO data. Yeah, there are some questions. Give me a second. In HANA, can we take controlling area currency 20 or 30? Of course, just like in ECC, the currency settings and ledger settings are changed in here, in fact. Yeah, see here, okay, I'll come to that point. So account-based Coppa is stored in COEP, it is nothing but CO data. Here it is stored in Agdoka table. Apart from other CO data, account-based Coppa is also stored in Agdoka table. This is also one major change. And any material ledger data. Okay, and one more thing is, yeah, ledgers and currency settings changed. This is not specific to CO. It's been changed a lot. Okay, and material ledger. Material ledger in ECC, material ledger is optional. It is mandatory in S4 HANA. Okay, and actual costing. Simplified. So when you do actual costing run, the number of steps in actual costing run is decreased. Okay, it is very much simplified. Okay, and what next? Actual costing and account-based Coppa has a lot of functionalities. Okay, so costing-based Coppa, no difference. Okay, so no difference, both are same. When it comes to account-based Coppa, a lot of improvements are done. I told you already, it is recommended to use account-based Coppa in S4 HANA. This is the reason. For example, things like, okay, COG split is not possible. Yeah, here it is possible. In S4 HANA, so it's a major improvement. And there is also variance analysis. Not possible. This is possible here. Yeah, basically account-based Coppa has its own advantages and costing-based Coppa has its own advantages. The major advantage of account-based Coppa is reconciliation issues. In costing-based Coppa, where it is S4 HANA ICC, there is something called reconciliation issue. So account-based Coppa has no that problem. But these two are not possible in account-based Coppa of ECC, but they are possible in costing-based Coppa. That's the reason we use costing-based Coppa in ECC. And as these two have been overcome in S4 HANA, it is recommended to use account-based Coppa. COGS split means, yeah, here we were discussing something, yeah, like somewhere. Yeah, COG means it is manufacturing cost and the difference revenue between revenue minus discount minus COG, you'll get the profit. So this is COG. This is something like standard cost or something like that of the product. And you can divide this into different components. If it is a manufacturing cost, for example, it can be divided into raw materials, activity price, material overhead, etc. And you can have separate value fields. So this 15,000 can be divided into different columns here. That is COGS split. So it is possible in, this is costing based Coppa data structure. This is also possible in account based Coppa of S4 HANA. It is not possible here. This is also not possible. I am highlighting this. What is variance analysis? I am talking about production variance. So production variance can be settled to Coppa, and it can be divided into different categories like input price variance, input quantity variance, resource usage variance, etc. For example, if more raw material consumed than that is mentioned in the standard cost, then it causes input quantity variance. Or if raw material price has changed, it is input price variance. So like that you can analyze what you call scrap variance. So all of them are called variance categories, and you can send variance categories to casting based Coppa. And it is also possible in account based Coppa of S4 HANA. Yeah, this is possible here, not I have to delete. So these are the major improvement in account based Coppa of S4 HANA. That is the reason it is recommended to use account based Coppa. And moreover, account based Coppa don't have any reconciliation issues, and you don't need to do much configuration for account based Coppa. Account based Coppa works based on cost elements. So but costing based Coppa need explicit mapping. Yeah, so these are some of the major changes. And ledger settings, currency settings. And someone asked one question, what is that? Yeah, controlling area currency and currency settings. Yeah, they are related with ledger and currency. Settings are different, but here also you can use a controlling area currency as group currency or a separate controlling area currency or company code currency. There is no difference in that. But from FI point of view, currency settings and ledger settings have been changed. Okay, and one more thing is all these currency and ledger settings reflect in Agdoka. That means Agdoka is not just for FI, it is also for CO. So these currency settings, whatever you use, ledgers, whatever, they are reflected in both FI as well as CO. Okay. Yeah, this is one of the big changes, in fact. Next, any questions from your side? Yeah,
So we will
now
discuss all kind of price variance, right?
all kinds means what?
That price variance, input price variance, all.
Yes, yeah, that's what we are discussing here. Not only in product costing, yeah, in account based, they are also transferred to Coppa. Here on in product costing, we're talking about variance categories. Example, input price, and we are going to discuss them in practical. We are going to do all the activities right from primary posting in FI to product costing, settlement of production order. And we deliberately generate some variance, and we are going to analyze it. Input price variance, input quantity variance, etc. These are also again in product costing also here.
And we will discuss process costing also, right? That apart from BOM, we will do the other way, right? For that is chemical industries, like chemical industries, we are using.
No. The example we are going to take is production order here. PP. Okay, if you're talking is what you're talking about PPPS. PP and processing. Yeah, here we have two. Yeah, if you open in. Yeah, any questions before that? Okay, let me log in meanwhile. Yeah, any questions from your side? Others? Yeah, this CO training, the question is, I answered this actually. This CO training for freshers or experience. Yes, you are a fresher, but did you learn FI? That is my question. Yeah, Satish, did you learn FI? If not, you have to take FI course first, strictly. Okay, model user. Yeah, here when you go to logistics, okay, we have, yeah, we have PP module. We have also PP process module. This is chemical processing, pharma, they use this. But the examples we are going to take is production. So manufacturing order can be either process order or production order, but we are going to take production order.
Okay,
So we
here
have
we are
process
using
orders.
recipe, that kind of things, recipe.
Pardon?
Here we are using recipe, right?
Yes,
Master.
yeah. Here, yeah, we call it as routing there, routing and BOM there. Here they call it as a recipe in process,
Yeah.
in production
Correct.
process. But thing is, okay. And this course is, like, as I told you, these topics are not independent topic. Like whatever we do in the very beginning, cost center accounting, they are going to reflect in the last topic. Okay. So that's the reason we have taken production orders and production module here. Most of the examples are taken from there. But you can apply this with a little bit effort. You can apply it in production process or project systems also. You can apply it.
I can do
Please
practice
explain
also,
this
right?
course suit to whom? Yeah, Satish. Okay, you have audio issue. Satish, yeah, in the beginning I explained here actually. Target audience. Prerequisite is knowledge in cost accounting. Knowledge in FI. If you learned FI already, either ECC or S4 HANA, you can take this course. Even if you are a fresher, if you have knowledge in FI, you can take this. And that's why I told target audience. If you have a FI consultant, you are already working as a FI consultant, and if you want to upgrade to CO, you can take this. And if you are already working as CO consultant in ECC platform and you want to upgrade to S4 HANA platform, then also you can take this. If you are a fresher, but you got trained in FI CO module, but not so good at CO, generally there are available FI CO courses, regular FI CO course. They teach FI, okay, but CO they just give you a basic thing about CO. So you cannot become a CO consultant with that. So if you learn FI CO, but you don't have, even if you don't have experience, you can take this course. Clear, Satish? Yeah, difference between quantity structure and without quantity structure. Yeah, I was explaining here, like, yeah, with quantity structure means BOM and routing are available during the stages, like when the initial stages of a product planning or product introduction, we may not have BOM and routing. So we can just create unit cost estimate for it. You have to enter quantities manually. Mixed quantity structure also going to be covered. Yes. Kalyan, there's a question from Kalyan whether mixed quantity is structure. Mixed quantity means here there is something called if alternative procurement alternative. If a raw material is procured from two different vendors, each vendor price is different. So which price is going to be taken? And there is something called mixing ratio. How much you procure from each vendor in plan. If you procure 50% from one vendor and 50% from other, so average cost is calculated. Vendor 1 price divided plus vendor 2 price divided by 2. If it is any other ratio, system calculates accordingly. Yeah, it is going to be covered mixed cost quantity structure. Yeah. So meanwhile, still any questions you can, yeah, you can put forward in the next session, or you can ping me to my WhatsApp, or you can raise the question now. Okay, as I announced, the next session will be we're talking about regular sessions. Regular sessions from 29th Tuesday. And time is 8:15 to 9:15 AM India
Mr.
time.
Srinivas, Monday is off.
Pardon? No, we are going to start from Monday onwards, Tuesday onwards.
Okay.
Okay, this is Monday to Saturday. Okay, let's make it Monday to Friday. If required, we'll take on Saturdays also, but generally Monday to Friday, 8:15 to 9:15 a.m. India time. Yeah, I'm going to share this document as well as the recording of this session, and hope all of you have shared your Gmail ID in the chat box or here in the, if you maintain it here in the username also. Yeah, any more questions?
Sir, this is Sundar Rao. I am having one question.
Mm-hmm.
Hello.
Yeah. Yeah, go
Sir,
ahead.
there will be some business manufacturing process. See, they will produce 100 quantity. Suppose by default 10 will go by scrap. That type of scenario also you are taking, sir. Each and
Yeah,
every
yeah.
process, some scrap will happen.
You're talking about scrap variants. Are you talking about scrap variants?
Yes, sir. Scrap variance means it will be converted into factorized into production costing, no, sir. That type
Yes,
of
of
scenario
course.
also you are taking.
Yeah.
Yeah.
See, yeah, scrapping means if material is getting wasted means it is a cost of production only. It will become part of standard cost estimate. Yeah, here, yeah, one of the categories is we are talking about variance categories. It is one of them is scrap variance.
Yeah.
So
Sir,
we are going
what
to
I
maintain
mean
plan
is,
scrap. Okay, we are going to maintain plan scrap. We are going
yeah.
to record actual scrap, and we are going to analyze the difference. Scrap variance. Okay.
Sir, one more doubt I am having. Daily you are recording and sending this classes, sir?
Not on daily basis, but whenever you need, I'm going to share them. If any miss any sessions or something like that.
Okay, sir. I will talk to you separately, sir.
Okay.
In this
Okay.
regard.
So, and any more questions? Yeah. Still, if you have any questions, you can ping me in my WhatsApp.
Yeah,
Hope,
I have some
all your,
questions
yeah.
because I am not from the consulting side, I am from the business side, but I am already
Okay.
working in SAP from last 5-6 years, and my core
As a
main
end user.
module is CO as a end
Okay.
user as well as a key user.
Okay.
So I will call you separately.
Okay. So your question is whether you can take this course or not. Do you have knowledge in FI? Basic
I
configuration, like
have
how?
basic process knowledge from all the modules like FI, SD, ES,
Okay. Yeah.
and
In
CRM,
that case, it's enough. Yeah, actually, like
but I have
you know
not
how
worked
to
in FI.
not work, but you know how to create a GL account, how to display GL balances, at least something like that.
How to run the reports in the FI, that I know, but how to create the GL account?
Better if we have like how to create company code and that stuff. We are going to do that briefly here, but we are not going to discuss in detail, in fact. But
So I will call you.
Yeah, no problem. Yes. Yeah. Yeah. So hope all your queries got answered. Still, if you have any queries, you can ping me to my WhatsApp number. Okay, and I also give my number here. This is my WhatsApp number, and you can ping me. And you can use the same link, whatever the link you used today. The same link can be used for regular sessions also. Same GoToMeeting link. Okay. Thank you very much. Thanks for attending, all of you. Yeah.
Thank you.
Yeah.
Thank you.
See you
Thank you,
soon.
sir.
Thank
Bye.
you, sir.
Thank you. Yeah. See you on Tuesday.
Thank you,
Bye.
sir.
Thank you.
Thank you.
Thank you.